Assalamu alaikum. Accurate costing is critical for successful business. It becomes more important, especially in case of bidding for new jobs or contracts where a company needs a good costing system. This video explains how costs are assigned to specific jobs. First, we explain the flow of costs in a job order costing, followed by reporting job cost data, and finally, we explain the concept of over applied and under applied manufacturing overhead. But in the beginning of this session, I would like to thank my son Muhammad Abdullah Khan, who gifted me an iPad along with all the necessary accessories, without which making these videos would not have been possible. I would like to thank Nabia Khan for helping me out in preparing these awesome slides. I would like to thank my wife Samina for her care, encouragement, and constant support, who allowed me to use time for her in making this video. Let us start with the concept of cost accounting and cost accounting system. Cost accounting involves measuring, recording, and reporting product costs. Companies use cost accounting information to determine which product to produce, what price to charge, and what quantity to produce. Cost accounting system consists of accounts for the manufacturing costs and provide accurate information on the cost of a product. There are two basic types of cost accounting systems: a job order cost system and a process cost system. Let us first talk about job order cost system. Under a job order cost system, the company assigns cost to each job. For example, constructing a house is a job order, where each house is unique and custom built. In the same way, each printing job is different. So the objective is to compute the cost per job. Let us now talk about process cost system. A company uses a process cost system when it manufactures a large volume of similar products. Production is continuous. For example, production of cereal by Kellogg, the refining of petroleum by Aramco, and the production of ice cream by Baskin Robbins. Process costing accumulates product-related cost for a period of time. Company can use both types of cost systems. For example, General Motors use process cost accounting for general customers and job order cost accounting for a custom-made limousine for the President of the United States. Let us now talk about job order cost flow. The flow of cost in job order cost accounting parallels the physical flow of the materials as they are converted into finished goods. They first accumulate manufacturing cost in the form of raw material, factory labor, or manufacturing overhead. Then they assign manufacturing cost to the work in process inventory account. When a job is completed, the company transfers the cost of the job to finished goods inventory. And when the goods are sold, the company transfers their cost to cost of goods sold. There are two major steps in the flow of cost: accumulating the manufacturing cost incurred and assigning the accumulated cost to the work done. When the company incurs these costs, it does not attempt to associate the cost with specific jobs. Let us see how the company accumulates the manufacturing cost in the next slide. Wallace Company purchases 2000 lithium batteries at 5 per unit and 800 electronic modules at 40 per unit for the total cost of 42,000. The entry to record this purchase is raw material inventory debit and accounts payable credit. Let us now talk about factory labor cost. Factory labor cost consists of three costs: gross earnings of factory workers, employer payroll taxes on these earnings, and fringe benefits incurred by the employer. Let us see how to record a journal entry regarding factory labor cost. Wallace incurs 32,000 of factory labor cost. Of that amount, 27,000 relates to wages payable and 5,000 relates to payroll taxes payable in February. The entry to record factory labor for the month is factory labor is debit and factory wages payable and employer payroll taxes payable is credit. Let us now talk about manufacturing overhead cost. Manufacturing overhead cost may be of many types like property taxes, depreciation, insurance and repairs. Cost unrelated to manufacturing process are expensed and costs related to manufacturing process are accumulated in manufacturing overhead. Manufacturing overhead subsequently assigned to work in process. Let us see how to record manufacturing overhead cost. So manufacturing overhead cost is debit and all the payables are credit in this regard. So this completes our discussion on accumulating manufacturing cost. In the next slide, we will discuss how to assign manufacturing cost to work in process. So far, we have talked about how the manufacturing cost is accumulated. We have learned how raw material inventory, factory labor, and manufacturing overheads are recorded. Now we will talk about how to assign the manufacturing cost to work in process. Assigning manufacturing cost to work in process results in the following entry: debits made to work in process and credits to raw material, factory labor, and manufacturing overhead. Companies use job cost sheet to record the cost chargeable to a specific job and to determine the total and unit cost of the completed job. Each job has a separate job cost sheet. The work in process account summarizes the detailed data regarding specific jobs contained in the job cost sheets. Each entry to work in process inventory must be accompanied by a corresponding posting to one or more job cost sheets. Let us see how job cost sheet for raw material cost is made. Journal entry is recorded and then posted to subsidiary ledger. Material is issued for a job to be done through pre-numbered material requisition slips. The material requested may be direct or indirect for the job to be done. The direct material is charged to work in process inventory and indirect material to manufacturing overhead. Let me illustrate it on the next slide. Wallace uses 24,000 of direct material and 6,000 of indirect material in January. Now, direct material will be debited to work in process inventory, and the indirect material will be recorded for manufacturing overhead. And raw material inventory is credited by 30,000. Remember, we have recorded raw material inventory equal to 42,000 when we were talking about raw material accumulating cost. The raw material here is credit for 30,000 and the work in process is debit for 24,000 and manufacturing overhead is debit for 6,000. Let us look into how the direct material subsidiary ledger looks like. Now, the work in process was 24,000 and that is what we have in the ledger, and this is going to be assigned to 3 specific jobs, and the total of these work in process inventory 12 plus 7 is 19 plus 5 is 24, and that is equal to the work in process inventory. Let us see how job cost sheet for factory labor cost is made. Journal entry is recorded and then posted to subsidiary ledger. Companies assign factory labor cost to jobs on the basis of time ticket prepared when the work is performed. The time ticket indicates the employee, the hours worked, the account and job to be charged, and the total labor cost. Finally, the journal entry is made. Let us look into an example on the next slide. The time ticket is given over here, and it specifies that the total factory labor cost is 32,000. This consists of 28,000 of direct labor and 4,000 of indirect labor. You can see that direct labor is debited to work in process inventory and indirect labor is debited to manufacturing overhead, and the factory labor is credited by 32,000. Remember that this 32,000 was recorded when we prepared factory labor accumulating cost. The work in process now increases by 28,000 and the manufacturing overhead by 4,000. Next, let us look into how the direct labor subsidiary ledger looks like. It is assumed that the direct labor cost charged to the 3 jobs are 15,000, 9,000 and 4,000. Please keep in mind that posting to the direct labor columns of the job cost sheet should equal to the posting of direct labor to work in process inventory. You see, 15 plus 9 is 24 and plus 4 is 28. Let us see how job cost sheet for manufacturing overhead cost is made. Journal entry is recorded and then posted to subsidiary ledger. Manufacturing overhead relates to production operations as a whole. Thus, overhead cost is not assigned to specific jobs on the basis of actual costs incurred. Rather, it is assigned to work in process and to specific jobs on an estimated basis through the use of a predetermined overhead rate. The predetermined overhead rate is based on the relationship between estimated annual overhead cost and the expected annual operating activity, expressed in terms of common activity base. The company may state the activity in terms of direct labor cost, direct labor hours, machine hours, or any other measure that will provide an equitable basis for applying overhead cost to jobs. The formula for a predetermined overhead rate is given over here, and using a predetermined overhead rate enables a cost to be determined for the job immediately. So we have the actual activity base used times predetermined overhead rate, and this is assigned to the different jobs that may be there in work in process. So let us talk more about it with the help of an example. So we have the overhead cost of 280,000. The direct labor cost is 350,000. So we divide the overhead cost by the labor cost, direct labor cost for the year, and that gives us 80%. This means that for every dollar of direct labor, Wallace will assign 80 cents of manufacturing overhead to a job. Let us see how job cost sheet for manufacturing overhead costs is made. Journal entry is recorded and then posted to subsidiary ledger. We have to calculate the amount of applied overhead, assuming direct labor cost was 28,000. So 28,000 times 80% gives us 24,400, and this entry reduces the balance in manufacturing overhead by 22,400 and increases the work in process inventory by the same amount. The journal entry will be work in process inventory debit and manufacturing overhead is credit. Next, let us look into how the manufacturing overhead cost subsidiary looks like. Again, you can see that the balance of 22,400 must be equal to the manufacturing overhead given in subsidiary ledger. You can see we have 12,000 plus 7,200, that makes 19,200, plus 3,200, that makes 22,400. It is important to note that at the end of each month, the balance in work in process inventory must be equal to the sum of the cost of shown on the job cost sheet of unfinished jobs. You can see this is what we have in the subsidiary: 39, 23 and 12,200, and that is what has been specified, and the two numbers are equal. So this completes our discussion on assigning manufacturing cost to work in process. In the next slide, we will look into assigning cost to finished goods. So far, we have talked about the manufacturing cost, how the manufacturing cost is accumulated. We have learned how to assign the manufacturing cost in work in process. Now we will talk about how to assign manufacturing cost to finished goods. For example, if we assume that Wallace completes job number 101, the job cost sheet appears here. So let us see how to journalize this activity in the next slide. The direct material used is 12,000, direct labor is 15, manufacturing overhead is 12, so the total is 39,000. The total quantity produced is 1,000, so the cost per unit is 39. So let us see how to journalize this activity in the next slide. So finished goods inventory is debit by 39 and work in process is credit by 39. You can see that the work in process reduces by 39 and finished goods increases by 39. So far, we have talked about how the manufacturing cost is accumulated and recorded. Then we learned how to assign manufacturing cost to work in process. Next, we learned about assigning cost to finished goods. And finally, we are going to talk about assigning cost to cost of goods sold. On January 31, Wallace Manufacturing sells on account job number 101. The cost was 39 and it is sold for 50,000. So the journal entry for sales is accounts receivable debit and sales is credit. And then we will be recording the cost of goods sold, and cost of goods sold is debit and finished goods is credit by 39,000. In the next slide, let us summarize the whole discussion. The company first accumulates cost by purchasing raw material, incurring labor cost, and incurring manufacturing overhead cost. Once the company has incurred these manufacturing costs, it assigns them to specific jobs. For example, as it uses raw material on a specific job, it assigns them to work in process or treats them as manufacturing overhead if the raw material cannot be associated with a specific job. Similarly, it either assigns factory labor to work in process or treats it as manufacturing overhead if the factory labor cannot be associated with a specific job. Finally, it assigns manufacturing overhead to work in process using a predetermined overhead rate. Always remember, do not assign overhead using actual overhead cost, but instead use a predetermined rate. Next, as jobs are completed, the company transfers the cost of the completed job out of work in process to finished goods. Finally, when goods are sold, as specific items are sold, the company transfers their cost of finished goods inventory into cost of goods sold. In the next slide, we will talk about reporting job cost data. At the end of a period, companies prepare financial statements that present aggregate data on all jobs manufactured and sold. The cost of goods manufactured schedule in job order costing has only one exception. The schedule shows manufacturing overhead applied rather than actual overhead cost. Let us now talk about the concept of under or over applied manufacturing overhead. When manufacturing overhead has a debit balance, overhead is said to be under applied. Under applied overhead means that the overhead assigned to work in process is less than the overhead incurred. When manufacturing overhead has a credit balance, overhead is over applied. Over applied overhead means that the overhead assigned to work in process is greater than the overhead incurred. At the end of the year, manufacturing overhead is eliminated by adjusting cost of goods sold. Under applied overhead is debited to cost of goods sold, and over applied overhead is credited to cost of goods sold. Like, look into this example. Wallace has 2,500 credit balance in manufacturing overhead at December 31. So the journal entry will be manufacturing overhead is debit and cost of goods sold is credit. So this completes our discussion on job order costing. Remember, effective questioning brings insight. which fuels curiosity, which cultivates wisdom. If you have any question regarding this session, then please don't hesitate to ask in the comment box or by email, and inshallah I will reply you back. Happy learning. Thank you so much.